Hey guys, what's up, how's it going? My name is Rob and welcome back for another video. In today's video, we have the first video of the new year. That's going to be the portfolio update. So we're going to jump aside my portfolio, my Canadian stock-based portfolio on Wealthsimple Trade. I'll show you guys my stocks. I'll talk about some things. I'll show you guys what stocks I'm kind of looking at today. We got lots of good dividends, some pretty good dividend payouts today. So I'll show you guys the dividend income. I'll show you guys the stocks I'm buying with those dividends. And I'll give a recap and show you guys everything I've been doing as of lately on my portfolio. So the first thing, like usual, we're going to do is we'll jump right in. I'll show you guys the updates on the portfolios and we'll see how our stocks have been doing over the past couple days. So like usual, we'll jump inside the accounts here and I'll show you guys the different portfolio values of each account here. We'll start off with the TFSA since it's our biggest account and the most important one in my opinion. Sorry about the layout here. It looks like Wealthsimple Trade is having some weird interface issues. So I know you guys, it's kind of hard to read this top part here. Looks like the graph is overlapping you know how much I've earned here, but just kind of ignore that. I guess they're having some issues here. But over the past day, the TFSA is currently down about negative $400, which is kind of just around rounded off to be about 0%. So a little bit of a dip in the market today. Nothing really happening too much though. Over the past week, we are down negative 2%. So it looks like we have seen a bit of a dip in our TFSA, which once again is more US growth-based stocks with some good Canadian dividend stocks as well. That's the main theme of the TFSA. So we're down negative $1,501 over the past week. But if we go over the past month, we are up 1%, which is $1,200. Over the past 3 months, we're up 7%. I know this is kind of hard to read, and sorry about that, guys. I do apologize. But over the past 3 months, regardless of the little dip we've had recently, we're still up 7%, which is $6,000. And you can see it's really starting to compound and grow as we've been adding more money and adding more deposits into the account on a regular basis. And the TFSA is currently up over the past year. So the 1 year mark for the TFSA is up 13%, which is $11,000 tax free, which is pretty cool. And then if we go all time, the TFSA is currently at 15%, sitting around that 15 to 16% recently, which is about $12,000 to $13,000. So even with the dip, we're still sitting pretty good. It's nothing to really worry about. And if we zip on over to our Rrsp, this is a brand new account I've just recently been growing. This is one I'm going to be focusing on more for the new year. With the only stock we hold is Shopify right now. It's the only stock we have inside this account. But it's currently over the past day, Shopify, the small little portion of the share we have in our account is currently up 1%. Over the past week, it's down negative 17%. So Shopify took a big hit. I'm not too sure if other Canadian growth stocks are kind of feeling the same thing. But we see Shopify down 17% is quite a bit. Once again, this is a long-term portfolio, so we're not really worried about it. It's also not our main portfolio, so it's not a big deal. Over the past month, Shopify is down 19%. Over the past 3 months, down 17%. And if we go all time, it's down negative 21%. So it's a good thing this isn't our main portfolio. But then again, keep in mind, this is a growth-based stock, and these stocks do go up and down a lot. So that's kind of completely normal. And we will be focusing on the Rrsp going into the future. And last but not least, we have the personal account here on Wealthsimple Trade, which is going to be an extension of our TFSA. This is a small account. I kind of started towards the end of last year, and we put all our free income towards this account. We have $13,000, just under $14,000. Over the past day, the personal account is down. Once again, kind of sitting at the TFSA level, which is about 0%, and we should kind of see that more or less here. Over the past week, it's down 0%, so a bit of a dip, but not too much. Over the past month, it's up 3%. Over the past 3 months, it's up 7%, which is $800. The 1 year mark for the personal account currently sitting at 9%. So even just starting this account towards the middle of last year, after 1 year, actually I can see when we started here. It looks like we started it it was about April. So April we started the account. Over the past year, so even just almost at the 1 year mark, we've already hit an increase of 9%, which is pretty cool. Once again, just consistently investing in good quality stocks and ETFs, and then all time it's kind of sitting once again at that 9%. So that's the TFSA, the personal account, and the Rrsp. Before we go any further video, I just want to say that this video is brought to you by Wealthsimple Trade. And if you guys want to get started with investing with Wealthsimple Trade, if you scroll down to the description of the video, there is a link to get 2 free stocks from Wealthsimple Trade. Just click that link, and as long as you guys sign up for a free account and deposit at least $150 into your Wealthsimple Trade account, you guys can get 2 free stocks there. So once again, just a quick little recap on the 3 portfolios I talked about already. We have the TFSA, which is our main portfolio that we've been growing, and we did get some new contribution room this year. I'm going to do a video in the future talking about the TFSA and doing an update on it for 2022. but we got $6,000 we can invest. So we will be putting some money inside the TFSA, and that's going to be our main focus for this year until we max that out. And then we have the personal account, which is more of our dividends based stocks. That's kind of like just our extra account. Once we max out our TFSA, we put it into our personal account. And then we have the Rrsp, which is more of our growth based kind of retirement account that we're slowly building over time. The next thing I'm going to do is I'm going to show you guys my holdings across all 3 of my accounts. I haven't done this for a while, so we'll get a little graph. I'll show you guys across all 3 accounts what stocks I own, which main ETFs I have, and I'll show you guys different allocations and whatnot of those different stocks coming up here. And if we head on over to track your dividends, this is the website I like to use to just kind of base my portfolio. I know it's not the best website, but it's free and it's simple to use. We can see some different holdings, and I'll give you guys an individual holding breakdown of some of the stocks and different ETFs in my portfolio. So we have a total of 14 holdings across all my portfolios. So that's once again the personal, the TFSA, the Rrsp. Our smallest holding is Shopify, once again sitting inside our Rrsp, and we have a total sectors of 8, and our largest holding are ETFs, which represent about 81% of my portfolio. So once again, I'm a big fan of ETF, passive, couch potato, whatever you want to call it, type investing. My recent video, I talked about why I'm a big fan of that type of investing, but that represents 80% of my portfolio. And then I have about 20% or so where I just kind of pick good quality individual stocks. But once again, they're pretty solid stocks. They're not like risky stocks by any means. They're companies that are good quality. They have a long history of doing well. They're pretty easy investments to make, right? Because I'm a big fan of that. But they do let me pick, they do let me kind of more critique and kind of alter my portfolio to be more to my goals and whatnot. So that's another main reason. And I like to pick stocks, like to have fun with investing. And like most people who watch the channel know, we like to have fun and whatnot, but I try to do it in a responsible way. So the number 1 holding we have is VFV, which is our S&P 500. That represents about 50% of the portfolio. I want to get this about 60 to maybe 70% as I get a little bit older. I'm going to be doing a video soon kind of talking about why I want to do that and why I think the S&P 500 or VOO or VFV, whatever version of it you kind of hold, is one of the best investments to make and one of the easiest investments to make. So that video will be coming out soon. Next up we have is VDY, which is our Canadian-based monthly dividend ETF, represents about 30% of the portfolio. And then we have some individual stocks like TD Bank, which represents about 5%. We have RioCan, which is our real estate sector, or kind of real estate diversification, if you want to call it whatever, about 4%. We have ATD.B, which is some consumer stores, you know, like the Mac stores and all those convenience stores kind of thing. I wanted to put some different diversification, so that was an amazing stock, big fan of it. Going down, we have Manulife, which is a financial one. We have TELUS, which is our telecommunications. And then we have Algonquin and some other ones here like Fortis, CNR, and some little ones here where we have just barely any holdings, so I'm not going to really go over them. But those are the main holdings inside of our account, and I wanted to give you guys an update on my pie or my portfolio allocation or breakdown, whatever you want to call it, kind of thing. And here's a quick little update on some of the buys I made since the beginning of the year. We'll cover these, and I'll show you guys what stocks I'm going to be focusing on today because we do have some money from some dividends and whatnot. So we got some nice dividend payments, so we'll put some of that money back inside the portfolio. So the first fractional buy I bought was VFV, once again the S&P 500, just kind of adding more of this. This is my main focus in my TFSA to get that tax-free income growth. So the main focus was I bought $93 of VFV. I bought some more fractional shares, $13 on January 6th. You guys can see I don't make big deposits in my portfolio. It's just consistent deposits, and that's the main key. On January 10th, I bought another big deposit of VFV, and then I bought some TD, and then once again some more VFV. So lots of the S&P 500, and I bought 1 share of TD on the 10th, which was yesterday. So once again, not huge deposits, but it's just consistent money going into my portfolio and buying things on a regular basis and just reinvesting that money. So if we look at how much I actually have inside my holdings inside my TFSA, is I have $261 inside my TFSA today. So we're going to be putting that once again into VFV as the main focus, but I will be buying some other stock here. I think I am going to buy some ATD to bring that up because this ATD plus TD are the main big stocks I'm pretty excited about in my TFSA. So those are the main ones I'm going to be focusing on. So I will buy about $100 or so of VFV, so I'll put that through. We'll buy 1 share of VFV, and then the rest of it I'm going to be putting inside my I'm going to be buying ATD, and then I do have a little bit of money inside my personal account that are also going to be talking about as well here. So I'm just going to go in here, we'll go back in here, we'll go into the TFSA, and I have $157 left. So we're going to take that $157 and we're going to be putting that into ATD like I just mentioned. We do hold quite a bit of ATD, but once again, this is a stock that's just been doing really well. I'm a big fan of the company. Over the past 1 year, return is up 18%. Over the past 5 years, it's up 58%. So it is a growth-based stock. It is a dividend growth-based stock, but I'm a big fan of inside the TFSA. And as I move more to getting smarter and kind of really looking at my goals as an investor, I am a big fan of holding some of those more growth-based stocks inside my TFSA. Once again, just for the tax-free benefits, to get that nice free stock growth and those dividends kind of compounding over time. So we'll put about the rest of the money, which is $150 inside of ATD. We'll go back here. We'll just put it down a little bit so I can get that through. And the other thing I want to focus on is the money inside the personal account. So go back here. We'll click on personal. Go to the personal account, and what we're going to do here is we have $23 to spend today. So I will put that into a stock here. We'll kind of scooch down here and see. So we have some different options here. I could put them into the ETFs. I could put them into TD. I could put them into TELUS. I could put it into Power Corporation. This is another company that's kind of been a little bit on the negative. I also could put it into Algonquin Compound Utilities because I think they are going to have a good rebound year this year. They had a really rough year last year, and I'm a big fan of the company. I'm not too sure if they offer fractional shares for this. We can click on it and see, and it doesn't look like they do. So that's one thing you got to kind of keep in mind when you have a little bit of income left over, is you need to buy stocks to fractional shares. So the only stocks we can really buy with $23 that have fractional shares, I believe, are TD, VDY, and VFE, I think. So we'll check out TD here. And if TD, yes, it does have fractional shares. So unfortunately for this week, we'll just put our money, the $23 that we have, into TD because that's the only stock that has fractional shares. Hopefully in the future, Wealthsimple will be adding more fractional shares, and we can kind of pick up some more smaller stocks if you guys just have a couple bucks inside your portfolio. And because I am a dividend-based growth investor, I like to focus on dividends. And if you guys have been following my channel, one of the interesting things I've been doing on these video series that I do on a weekly basis, like these weekly portfolio update videos, is showing you guys how I'm kind of getting that dividend income coming in on a regular basis, how it's growing by a month per month. And also I'm going to show you guys kind of what I've been buying with those dividends to kind of improve my life and showcase to you guys how like investing even in the beginning can benefit you and how it can grow over time. So the first thing we're going to do here is I'll give you guys the dividends that we've kind of been receiving over the past couple days, because we did get some pretty big dividends to start the year off. And then I'll show you guys the monthly dividend income, and then we'll talk about some of the things I've been buying with the dividend income and how I've kind of been some new things I've been trying out for the new year. Alright, so here's the fun part of the video. As a lot of you guys know, we're going to look at the dividends for the past week, and we got a lot of dividends to start off the year, some big payments, and we do have some coming towards the end of the year as well. So this is going to be a big month. This might be the biggest month in terms of dividends for the portfolio, which is always exciting. So January 4th, we got a dividend from TELUS. I almost said TD there, TELUS, for $7.86. This is in our personal account. In our TFSA, we also got a dividend of TELUS because we hold it in both accounts, $10.80. So that's about $17, $18 in total. Going inside the personal account, once again, we got a dividend of VDY, $13.58. And then we got a dividend of VFE inside our personal account of about $10 too. And then RioCan gave us a dividend of $16. Once again, those REITs give us some nice monthly income inside of our TFSA. And then we got our big dividend payments from our TFSA for VDY and VFE. So $79, $80 from VDY, and then $165 from VFE, giving us our big quarterly payment. And if we head on over to the spreadsheet to kind of track the dividend income on a monthly basis, you guys can see once again, if you're a fan of the channel and you guys do watch on a regular basis, we've seen the dividend income from this portfolio just consistently grow on a monthly basis, just consistently growing. And if you go all the way down to month 25, which is January, we have a dividend payment so far of $303. So once again, this is the most we ever got so far, and we still have a couple of stocks paying some dividends towards the end of the month. And I think we do have a big one from TD. I think it is at the end of the month. It's either the end of January or the beginning of February. So that'll also bump us up quite a bit. So it's going to be the best month we had so far. And total dividends, if we add up all the months together, is $1,900. So it's starting to get there. It's starting to add up on a regular basis. And here's a cool little visual for you guys to see the growth over time inside the portfolio. on how our dividends have grown on a monthly basis. So once again, month number 1 all the way to month number 25. That's about 2 years, 2.5 years. Oh, I guess just finished 2 years actually. Sorry, because we did start this portfolio in January of 2020. So just finished the 2-year mark, and we're already hitting about $300 a month in dividends. And since this channel is about personal finance and frugal living, and I've been showing you guys how I've been using my dividend income to make my life easier and try some new cool things, one of the new things I started for the new year was actually fermenting. And you guys can see here I got a nice big batch of ferments, and I wanted to start fermenting because I learned about the health benefits of probiotics, but I realized that they're really expensive at the store. So you guys can see here I got some ferments, I got some peppers, some onions, some carrots, some sauerkraut, and fermenting is not to be confused with pickling. It's not the same thing, it's a little bit different. Over here I got some beets, some fermented beets, and I've realized that it's super cheap and way cheaper to ferment than buying things. Now I still buy some things from the store like kefir, and I did get the sauerkraut here, which I'll talk about in a second. It's very good, but it is a little bit expensive. I got some kimchi here, which once again is pretty good, but a little bit on the more expensive size. And like any kind of things like goat cheese and stuff, and or feta cheese will also be fermented too. But one thing I want to talk about, and one of the reasons why I got these mason jars, was that this little jar of sauerkraut, I'm going to compare this to this big one I made. So this little jar, which tastes amazing, which is really healthy and has lots of probiotics, it costs $6 to buy this little jar, which is not bad, but I eat a lot of this stuff. And this big jar I made, it was full when I first started it. It costed me $2 or $3 to buy the cabbage. So you can see a big difference. And here's some peppers and onions, which are amazing too. The stuff just tastes amazing. It's opened up a new world to me in terms of cooking and eating things and whatnot, and it's very, very healthy. Now the mason jars themselves were about $16 for a pack of 12, which was pretty good value, I believe. I think there was 12 in a pack, but I also got these nice little glass weights that are a little bit expensive. They're about 20, I think 20 bucks for 4 or 5, which is a little bit pricey, but these things fit perfectly. They're really easy, they're glass, they're really good quality, so I think it was worth it. In total I spent about $60 on this stuff, but you know, I'm going to save so much money down the line. I think it's worth it. I got them off Amazon, so I'm pretty excited, and I'm going to be starting lots of fermenting for the new year. Alright guys, that's it for today's video, so hope you guys enjoyed it like usual. If you guys want to support the channel, be sure to smash the like button and subscribe if you guys want to see my future updates on how I've been growing this portfolio and some of the other content that I do on this channel. I do have some big plans for the future. I'm going to be doing more personal finance stuff. I'm going to be doing more frugal living stuff. I'm going to be doing more stock-based stuff on the channel like always. And I will be doing some more reviews of some different programs, and I want to kind of try to expand some of my content. So once again guys, if you guys want to kind of be notified of when I publish a new video, just subscribe to the channel. Really helps out. But other than that guys, I hope you guys enjoyed the video. Let me know what you guys think in the comments, and I'll see you guys later.